European Central Bank President Christine Lagarde joining me at the Federal Reserve's Jackson Hole Symposium last week, where she broke down her criticism of American tariffs and the new trade framework between the U.S. and the European Union. Watch. President Lagarde, you have been critical of tariffs and calling it a tax on consumers. But I wonder, how should we look at some of the taxes in Europe? I mean, you've got a consumption tax, you've got a VAT tax, you've got a digital...
No, we just have VAT. We have VAT, and VAT...
What about a consumption tax in France?
No, we don't have a consumption tax.
Okay,
I've never paid it, at least.
Just the VAT tax.
It's VAT.
And what about a digital services tax? I mean, these are just taxes.
Yeah.
So how are they different than tariffs?
Taxes. You have plenty of taxes as well, because revenue has to come from somewhere, right? For the governments to pay for the police, the fire brigade, the roads and everything else, you need revenue. So you need to find your revenue somewhere, and tax is one way to generate it. Our VAT is a bit like the sales tax here in the US, and it varies from state to state. In Europe, it varies from member state to member state, but we have VAT just like you have sales tax. And I think that, I've said what I have to say about tariffs. I think that open markets, free markets, movement of goods is a good thing and has been very helpful. But equally, I also believe that once a deal is done, once there is certainty, and it's not going to be challenged and renegotiated 100 times, I think that, enterprises are going to deal with it and corporates are going to face it, and a new equilibrium will be found. But there is a major disruption that was caused by that, sure.
Because of the uncertainty of it, lack of clarity.
Yeah.
Secretary Bessent has said that he's expecting tariffs to bring in $300 billion into U.S. Treasury this year. What is your reaction to the impact that tariffs have had so far?
Look, when I look at inflation, from my perspective at the ECB, we expect a very minor impact on inflation. It might have a small impact on GDP of Europe, but the US is only 17% of the whole trade business of Europe. So it is 17%. It's a big chunk, but it's not a huge amount of our trade. And I think that, as I said, companies are going to adjust. But at the end of the day, tariffs, unless there is some magic that applies, are paid by the consumers. If tariffs are increased on the goods that we import in Europe, if I want to buy a pair of jeans that comes from the United States and there is tariff on jeans, which is not the case, then I would have to pay for the tariff myself.
But so far, the tariffs have not been impacting the consumer. We saw the CPI recently. The CPI was tame while the PPI was higher. Yeah. So it looks like companies are eating the tariffs right now.
Well, let's see how long they can eat it up. I think the stock markets are not thinking that they will eat up for a long time.
What did you make of the new framework between the United States and the European Union with regard to trade?
It is what it is. It has been negotiated. My hope, because my concern is stability. I don't want more uncertainty. Uncertainty has abated. We still have more than we had in the past, but I don't want uncertainty to come back up again. So if there is a deal, if that deal is 15%, if it's a cap for all good except those that are under particular investigation or due diligence, companies will adjust, markets will adjust, but I don't want this continued uncertainty.
Right. The uncertainty, I think, was the issue with corporate America saying, and I don't know if this is the case in Europe, but saying, I will hold back on putting new money to work. I will hold back on investment because I'm not sure. I need clarity. But then the critics will say, look, you don't see as many Cadillacs being driven around in Europe as you see Mercedes in the United States. So in terms of trade...
I'm not sure our roads are fully equipped for the Cadillac and the very large and imposing American cars. But I think that the markets are... I think under the agreement, the American cars will no longer be tariffed as they were so far. So we'll see. We'll meet in 2 years' time and see how many Cadillac we can buy.
Well, I love Mercedes. I'm not, but I like Cadillac as well. Let me move on to digital assets because, of course, the ECB and your colleagues in Europe will be dictating or overseeing changes in crypto, changes in digital assets and a digital euro. What would you like to see?
I'd like to say that we started that process a few years back. We are moving on very practically, because we are now really at the sort of pre-pilot stage, experimenting with different types of technologies, and we should be ready to launch in about 18 months.
That's very exciting. How will this change people's lives?
You know, it's people who have dictated that change, because in many, many countries now in the European Union, you see that customers, clients, citizens, whatever their age, they are prepared now to use digital currencies. So the digital euro for me is like digital cash. Instead of getting banknotes from the ATM machine, they'll be able to use cash, but in a digital form, whether they use it with their phone or other devices. But that's exactly the equivalent of cash, but in a digital form. And it's to help them, pay in the way they want and transact in the way they want. It's more opportunities for them.
What do you want to say to critics who say a digital euro risks surveillance? It risks becoming a tool of financial surveillance and central control.
Not true.
Why not?
Because we are looking at a technology that will actually protect the privacy. And I think that in peer-to-peer payment, this is already a given. And for larger payments, where, for instance, AML, anti-money laundering rules will have to apply, because we don't want to support, hanky-panky business of a dark nature, then the rules of scrutiny will be applied by the banks, which already have access to the transactions and the payments that are made by their clients. There's not going to be more than that. And we are not interested in the data. I mean, the private sector is interested in data, the banks are interested in data, and they can monetize that. But we have no interest, and we couldn't do it. It's not in our business.
So you can reassure people that a central bank digital euro will not undermine people's freedoms?
Correct. It will give them additional freedom, actually.
Now, we've got
because it will give them a payment opportunity that will be of a European nature.
Tell me about your approach to governing all of this, because private stablecoins, and particularly U.S.-dominated stablecoin, are growing rapidly in the United States. But the U.S. has taken a different tack by giving more overseeing to the private sector, Tether and Circle, and of course the Genius Act. Do you see this as a genuine threat at this point to the euro's role?
First of all, I think that there is a regulatory framework that is now in place, which is a good thing. The Genius Act is welcome, and I think there is great similarity between the Genius Act, which organizes the way in which stablecoins function in the US, and MiCA, which is exactly the equivalent in Europe, which also organizes the way in which cryptos and stablecoins operate. Because at the end of the day, if people are interested in stablecoins, they should be confident and certain that it's one for one. If they have $1 stablecoin, they need to be certain that Circle, Tether, anybody else who is issuing stablecoins hold the equivalent in actual dollars. And that is indispensable. Now, the links between the US dollar stablecoins and the euro stablecoins, this is something that needs to be well organized, scrutinized, because we want all consumers to be protected in the same way, and there is no reason why certain consumers would be more at risk than others.
Okay, can you regulate them out of existence? I mean,
No, this is not the point. I think the point is transparency. It's disclosure of what's available, the ability to check that there is this one-to-one, which is predicated under the Genius Act as well. We cannot just say, oh, it will be one-to-one and nobody checks on that. No.
You've talked in the past about not relying so much on the dollar and perhaps having a basket of currencies as a reserve. What do you want to say about that? Do you still feel that way?
I think that, the dollar currently is about 58% of all central bank reserves around the world. The euro is 20%. So we are the second reserve currency, but the dollar is still in a very dominant position. And it will continue to be that way, probably for a long period of time. But equally, other currencies should build up their resilience, their capacity to respond to the demand of their customers and other foreign countries. So I do think that it's a good thing to have a strong euro. The basket of currency is something that I was particularly interested in when I was at the IMF, because that was the special drawing right, which was this sort of international currency used as a reserve and which can be converted into 7 national currencies around the world.
So you don't see a reality of a basket today?
I don't see a basket of currency as being the reserve currency of choice, no.
Right, of course. What about tokenized securities? What can you tell us about that? Because tokenized monies and securities promising 24/7 settlement, fast, reduced counterparty risk, can that materialize?
I'm not enough of an expert to actually, speak sensibly about that. I'd rather focus on my central bank's job.
So what can you do to ensure that the euro remains relevant in the future of money rather than becoming a regional currency with all of this digital work underway?
Make it digital, and that's exactly what we're doing. So the digital euro will be one way to respond to that. I think that the financial sector in Europe is also very keen to be active in the field of digital tokens, and I'm sure that we will see more development in the future in that respect. And as long as consumers are protected, as long as there is transparency and there is compliance with the framework that has been put in place in the US, in Europe, and in any other country, then it's fine. Hopefully, and that's important, there will be consistency, because if not, then there will be a risk of arbitrage and going to the lowest possible regulated jurisdiction, and that can be any kind of Caribbean islands. I'm sorry, I have nothing against the Caribbean islands, beautiful places, but as we know, some of those islands are propitious to not highly regulated business, to put it
President
as an
Lagarde,
understatement.
I'm sorry. Assess the moment in time for us. I mean, it's pretty incredible what's going on with regard to what we're talking about, digital assets, a new makeup of the Federal Reserve soon. How do you see things changing? What's most important for you as you look ahead to the coming 10, 15 years in terms of growth in the Eurozone?
As I said earlier, a real single market, a capital market union, significant simplification, avoiding the overlapping and overlaying of rules. And I think that with that, Europe will prosper, will blossom, and will do well. I think there has to be more focus on innovation, research and development, including in particular from the private sector. But it's an exciting moment. There's so much innovation going on, and we need to continue working together. That's also the thing that I'm very keen on.
Do you have plans to lure in that private capital into Europe? How do you do that?
It's very high on the list of priorities of the governments of Europe. They know that what is needed is money, as simple as that. We need more equity, and the Capital Market Union is one conduit to that equity.
I think we've covered a great set of issues, and I so appreciate you sitting down with us for this time.
It's been lovely.
Thank you so much. President Christine Lagarde.